Yes, of course, we have moved past that level of 25,200 mark, but where are we headed from here on? Let's try to decode that with Ruchit Jain, who is the Vice President of Equity Technical and Research at Motilal Oswal, joining us on the show right now. Hi Ruchit, good to be speaking with you. Good afternoon. And firstly, what do you make of the markets today? Almost at the day's highest point, and believe that we have broken past that consolidation phase. But how much confidence are you having on the market movement right now?
Yeah, hi, very good afternoon. Well, what we have seen is in this entire month of June, our markets have seen more of a consolidation phase, where the index has traded within that range of 25,250 on the higher side and 24,800, 24,700, say, range on the low side. But the good thing is that in this entire month was, one where we had seen a lot of negative news flows with regard to rising geopolitical tensions globally. And in spite of such news flows, our markets have managed to show only a time-wise correction rather than any significant price-wise correction. And if you look at last 2.5 months move, since the second week of April, since 11th of April to 11th of June, already in 2 months, our mid-cap index had given a rally of about 20-21%. So I think this entire consolidation seems that we are almost done with the time-wise corrective phase now, and we could see the markets resuming its next leg of rally, which could lead the Nifty towards 25,500 or even 25,700 going ahead. So overall trend looks positive. Any dips that are coming in this consolidation are getting bought into. I think there could be some sector rotations, but overall we believe that our markets would slow and gradually move higher towards 25,500 and then 700.
Okay, it's looking optimistic on the market. Ruchit, hi, good afternoon. Want to get your sense on the small cap end of the market, because the kind of exuberance, the run up that we've seen, the outperformance from this market, how sustainable do you think this space of the market is, the small cap space? And do you believe that now investors should be turning a little bit cautious on this given the kind of run up we've already seen?
I think to an extent, one should avoid those stocks which have already seen a very sharp up move in last 2.5 months, and rather look for such stocks where the risk reward ratio is favorable and we have not seen any kind of significant up move. So we are looking to for opportunities more in the large cap or even in the mid segment, more towards large mid cap names. So I think small cap, definitely the risk would be there because the stocks have seen a good run up over last 2.5 months. Any kind of minor profit bookings, then we could see some volatility in the small cap names. So from a risk reward ratio perspective, now we think that more of a mid caps or large mid cap names is one space where risk reward ratio seems to be favorable rather than the small cap stocks at current levels.
All right, so that's about the broader end of the market. But Ruchit, let's talk some of the movers and shakers in today's trading session, and let's touch upon BEL, because that is one of the stocks which has seen a fantastic run up in the past 2 months. But if we see today, it's almost a 3% cut coming in. The reasons are clear, that the geopolitical tensions are seen to be abiding for a bit right now. And well, of course, this particular counter has already seen a great run up of late. So maybe some bit of a profit booking is also kicking in. But Ruchit, can you help us with a chart check on this one? Because from those 420, 430 odd levels, it's the second straight day where we are seeing a bit of a decline. But do you believe at these 400 levels the stock should halt for a bit, or some more correction can trickle in?
So there could be some more dip, but this seems more of a pullback move only and not the reversal of the trend. No, just one should even see what has happened in last 1.5, 2 months post that India-Pakistan episode which broke out. The stock gave a breakout about 320 then. And from that 320, 330 levels, without any meaningful correction, the stock had rallied to 420. So almost 32-35% gains are seen in 1.5 months itself. So there could be some pullback move, but what we are seeing that the price up moves have been supported by very good volumes. And in this pullback also in last couple of days, the volumes are not that high. Means there is no volume-based selling happening over there. So I think 390, 400 would be the range where the stock would find a support base again. But overall trend remains positive. So one should not worry much about very short term. We could see some more dip about 15-20 odd rupees in the near term. But yes, it's a buy and dip stock, and any decline towards the mentioned support should be used as a buying opportunity.
Okay, so there's a strategy on BEL, but the latest greenhouse gas index shows a worrying increase with CO2 and methane levels at record highs. This surge is driving global temperatures upward, fueling extreme weather and threatening food and water security. At the India Climate Summit, carbon efficiency and offsetting are in sharp focus as India and the world race towards net zero targets. On that note, we'll slip into a very short break and talk about the last hour or so of trade when we return.